Traders at Access Bank say that they expect continued buying interest in the Treasury Bills market following Tuesday's sustained demand for the on-the-run OMO papers. Tobechukwu Ikpe, the Treasury Team Member at Access Bank, joins me now for a market update. Thank you so much for your time today, Tobechukwu, and let's get a sense of what we're seeing play out here in the fixed income space so far this week.
Thank you for having me. Sorry, I didn't get your question.
Yeah, Tobechukwu, if you can hear me, I just want to get your take on developments that we've seen in the market.
I can hear you, but I didn't get the question.
Yeah, just run us through what we've seen so far. It's midweek here in the market, and run us through what has played out so far, how sentiments are shaping.
Okay, for the markets, what we've seen today is markets opening a ripple for the liquidity. This is due to CNBC's interventions in the FX market. Yesterday, they sold $100 million to calm the demand pressure in the FX market. As market was inching up towards 1540, and then by the close of the day, closed around 1535. This morning also they came into the market to intervene at 1534 levels, selling about $65 million. So this has taken some of the liquidity out of the markets, the naira liquidity, and infused FX to calm the FX demand in the market. So we've seen markets liquidity go into a ripple this morning.
All right, let's look at the Treasury bills and the bond space. You know, what's driving sentiments there?
For the Treasury bills markets, we've seen slightly bearish sentiments as the market liquidity has declined, and also the anticipation of another OMO auction. So we've seen offers dominate the OMO bills from the short to the long end of the curve, as markets anticipate that there will be further OMO maturities next week and upper week. So once the liquidity improves next week, with the OMO maturity and FAC inflows, and also coupon payments towards the end of the month, markets players are trying to calm down some of the positions they built so that they can bid at that auction that will come up next week. For the NTB space, we've not really seen much appetite there since the rates have been dragged down over the last couple of months. So right now in that NTB space, market is slightly bearish with just a few investors cherry-picking attractive offers. For the bond space, this basically been a stalemate. It's largely quiet. Offers are hovering around 17% for the on-the-run bonds, the 31s, 32s, and 33s, and bids are slightly above that, around 17.3.
All right, let's stay with the Treasury bill space, and we're still seeing that the latest on the on-the-run bonds are still getting some traction there. You know, do you think that could be sustained going forward?
For the bonds, I think the next thing we need to see is what the DMO plans to do in terms of their strategy for borrowing. At the last auction, this last month, they oversold by approximately 100 billion from what they offered. The expectation was that they would sell exactly what they offered, which was 80 billion, but then they took some more of the bids that came in through the auction. After that, we saw bearish sentiment in the bond markets. The auction closed at 15.9 levels, and then we saw the bids on those bonds start to go up as oversupply of bonds came into the system. So bids on bonds right now are above 17%, with the expectation that there will likely continue to be more supply. But until DMO gives clarity through their bond circular that will come out later this week or next week on what they plan to borrow going forward, there won't be much activity in that space.
All right, thank you so much for your time today. Tobechukwu Ikpe, the Treasury Team Member at Access Bank.